Very much for coming along. My name is James Carney. I'm the Education Manager at the Chartered Institute of Logistics and Transport. I think some of you will already know me. Hello to you anyway. And the Chartered Institute, well, you're all members, I think, so I won't need to get into too much of what we do. But we saw we've noticed a lot of uncertainty and a lot of mixed messages around the process and activities that need to be undertaken. So we decided to ask Brian to come on as quickly as we could get him to give a briefing about what is likely to happen, what the implications of the Supreme Court decision in the US are, and how companies can position themselves to be ready as things change. And potentially look at refunds. So with all that said, please make sure that you sign up for webinars in the future. Brian will talk about an upcoming masterclass that he has as well, but we will have lots of other events like this. Please make sure to tell colleagues and friends that might be interested as well. Share your emails and encourage people to join the Institute. And if you have a requirement or a need for any other training, upskilling, or a brief webinar idea, or you'd like to share your own expertise, we're more than happy to hear from you. Please reach out to me or to Katie directly as well, and we'll try to organise something that fits your needs as well. With that, I'll hand over to Brian Murphy, and thanks very much, folks. Have a nice day.
Thanks, James. Appreciate it. Guys, just before I kick off the presentation, just to say the copy of the slides will be sent out to all of you who have attended as well, so just FYI. And I'll share a couple of resources in the chat. Important links where you should sign up to get more information on the refund process and everything we're talking about. So I'll send those in the chat just when we come to the final slide and next steps. Okay, so yeah, you will get a copy of the slides. So if I just start to kick off. Okay, yeah, so we should go for the next 30-35 minutes, and we can take, just as James said, you can put the questions in the chat as you're going along, and we'll have a chance for a Q&A at the end if anybody wants to join that. So as you know, last weekend was a busy weekend. Then the Supreme Court in the US eventually ruled on the tariff dispute, the IEEPA or emergency powers that they had, and now it's all about what that means for importers into the US or indeed exporters from Ireland, and the compliance issues that arise out of this, which is kind of going under the radar a little bit. So that's just what we're going to look at today. As much as we know, some of this we know lots about because the Supreme Court ruling, of course, is 170 pages, and we know all about that, but that's very much all the legal side of things. It's really what's going to happen next, and what's happening today that I think is the bigger operational concern. So initially, the background to it, what's interesting here is that it's almost a year. I think it was around the 20th of February, was it? Maybe last year, when you know, a lot happens in a year when all of the announcements were being made by President Trump and his administration to great fanfare, and that's almost a year ago. Okay, so it's about a year since not just the IEEPA tariffs, but also all the other tariffs that were brought in. It all started about a year ago. And we had the fentanyl tariffs were introduced against Canada, Mexico, and China. And then we had reciprocal global tariffs. And so we had the specific fentanyl tariffs, which were all about the precursors for drugs, that type of stuff. And then we had the reciprocal tariffs, if you like, where President Trump believed that if there was a trade deficit, you know, they were getting ripped off, whatever. And that was a broad range of duties or tariffs that were in there, anywhere from 10% to 125% 1 week, and like in China, and then it went down to 50%. There was all that crazy stuff going on, and that was the reciprocal global tariffs. Okay, so you know, these were almost immediately challenged. Businesses and certain states in the US, broad coalition of people, I guess, challenged the executive authority of President Trump to impose these the way he did without getting congressional approval. And multiple lawsuits happened. And I guess it did take a year, which can show how long these legal challenges can take. because the latest tariffs, there may be a legal challenge to that, but that could be gone by the summer. And the core argument here of people were that the executive branch of the government didn't have the authority, without the approval of the Congress, to impose these tariffs the way they did impose them. Okay, and all of this was justified under this. It was all justified. I have do I have a pointer here? Maybe yeah, it was all justified under the Emergencies Power Act. Okay, which was never used in 50 years. But of course, that was the justification. So that's how we got here. And then last week, the Supreme Court, in an overwhelming judgment, 6-3, which I'm not a legal expert, but apparently that is an overwhelming majority. They decided that these IEEPA powers, this piece of legislation, it's been around since like 1974 or something, and Trump was the first person to use it. It didn't authorize him to impose tariffs. Simple as that. To impose a charge. The language is important. A cost, a charge, a duty, a tariff. It allowed him to do other things, but he didn't do that with the IEEPA. He charged. He made money from it. So the Constitution in the US then explicitly says that this, for tariff setting authority, it has to be Congress. Tariff kind of defined as revenue raising. It's important. Like IEEPA itself, it actually, that legislation apparently never even, the actual text doesn't even mention, it doesn't even mention duties or tariffs. It only mentions regulatory powers. So there's no duty, there's no reference to revenue raising powers within it. The power to regulate importation does not equate to the power to tax. That's the main thing. And I know it's a very basic slide here, but to me, that's just, as an operational person, that there is the overview of kind of very kind of high level overview of the 170-page ruling. The regulatory scope here, the power just to regulate importation does not equate to taxing. Okay, and that's all IEEPA did. It was revenue raising. President Trump was trying to raise money. It wasn't about regulating paperwork. It was about collecting money. Okay, and that major questions doctrine, which is buried beneath in the legislation, that applied to prevent executive overreach. That's what it's supposed to do. It's there to provide to stop executive overreach into, I guess, operational things that should be the role of Congress. And President Trump and his executive crossed that line. Okay, so what happened immediately then with all this fanfare last weekend? The immediate response. So unlike, firstly, the IEEPA tariffs ended on the 24th. Okay, at 12 o'clock, and the end is important also because and the dates. And we'll touch on this a little bit later. From an operational point of view, for example, in transit goods, what happens to goods that are already on the sea? As of today. So the date and times of this timestamps are important for the people who are who already have goods en route, okay, and how they're going to be affected, because there's a window there where they might not have to pay those IEEPA tariffs. So tariffs ceased instantly on those dates and times. The collection of duties under IEEPA stopped immediately, but that's what the ruling said. But it didn't outline a refund mechanism, right? Hasn't outlined a refund mechanism. It has just mandated for a refund. And we'll talk about then what the refund mechanism is likely to be. It is basically, Supreme Court judgment basically said, refunds, you're owed them, but how it happens is not for us. That goes somewhere else. And we'll talk about that a little bit later. Okay. And then cases were mandated to the Court of International Trade. That court's based in New York, and that's it's a lower court, I believe, dealing specifically with operational type things, if you like. And the legal status for refunds is going to be it's going to be for these guys to determine. Okay, and that's the Court of International Trade. So that's something to watch, how they handle this process over the coming months, because the clock is ticking in terms of when the refunds must be applied. Okay. So IEEPA ended, but obviously the immediate action from the US executive was to impose new tariffs, I guess to try and offset, well, whatever reason that they tried to do it, I guess you could say offset the loss of revenue from the IEEPA tariffs, or maybe even to save face. And it's a great example, this whole story of how trade, which is cross-border trade, if you like, how inextricably linked it is to politics. Like, it's just, and it's always something that we have to keep in the back of our mind in terms of where we're trading with and how we're trading with and who gets into power where. So the new tariffs were imposed under Section 122. So I guess we're going to be calling these for the next 5 months Section 122 tariffs. That's what's in place now. The White House immediately invoked that section of the Trade Act from 1974, imposing a global tariff. President Trump, in his speeches or whatever, when he reacted to this on TV, was saying we're going to put them up to 15%. And I believe Section 122 has you can raise the tariffs there to 15%, but he didn't do that. It's now at 10%. Okay, he has the potential under Section 122 to raise the tariffs to 15%. Okay, but at the moment, as of today, they're standing at the reciprocal tariffs that used to be IEEPA, and any tariffs you were paying under IEEPA are now at 10% going in. Okay, but unlike IEEPA, this Section 122 authority is strictly limited to 150 days. So it's 5 months from whenever that was, the 24 to 2 days ago. And at that stage, the Section 122 is no longer legally mandated for. They disappear. The 10% goes unless it's extended by Congress. And that's where politics is in, isn't it? James was talking earlier that I'd forgotten about, that there are elections in the US and all of that this year, so who knows? But Congress have to extend this Section 122. Okay, so that's something to keep an eye on there. So I guess the key thing about Section 122 now is it only allows for short-term tariff action. Okay, so the administration have bought themselves 150 days to either win over Congress or come up with another plan. What other plan? Have they other plans in their arsenal? Indeed, they have. That's what we have to watch out for. This whole thing is creating even more volatility than we've had. Okay, and that's even before we look at reclaiming the refunds. So what's the immediate impact on the tariff rate? So what's eliminated are the fentanyl tariffs, which didn't affect us here in Ireland or the EU anyway. The reciprocal tariffs, which did until we signed our what we might call our beer mat trade agreement, because that's all those trade agreements were, coming from the US executive with Europe, with the UK. It was, they called them someone calls them paper napkin trade agreements. But I think a better Irish description would be a beer mat trade agreement, because they were very basic, just a figure. Okay, because real trade agreements that anyone involved in trade would know around the world, even mid-level employees of companies would know, trade agreements take years to negotiate, and no matter who you are, even if you are the US administration, you can't do them in the time frame that they try to do them. So they were really just a figure of a tariff. So these reciprocal tariffs were in place between Europe, say, and the EU until the trade agreement was signed. We'll come back in a moment. Sorry, we'll come back to in a few minutes to what these 122 tariffs, which are 10%, mean for our trade agreement. And targeted emergency tariffs, they're gone now. Okay, these targeted so they're gone as a method, as a trade a lever to put pressure on countries importing into America. Okay, so the immediate impact on tariff rates, while the average tariff rate has dropped for anyone dealing in IEEPA, a lot of legal uncertainty has now just increased. Okay, and that might be worse for business than paying some of the tariffs. And we'll see in a moment that some of the biggest issues now are going to be on the impact of calculating landed costs into the US. So Section 122 is now replacing IEEPA with a global tariff authority. It's a temporary duration, and the new rate structure is at 10%. With some tweet or something in the next 24 hours, it could go to 15%. But that would cause problems if it does for countries with trade agreements and so on. So Section 122 is essentially a a flat surcharge. So 122 is 10% flat surcharge, replaces the previous country-specific rates under IEEPA, but it also, and this is the thing, it also affects potentially the flat rate of existing trade agreements. So is it going to be stacked on top of the trade agreement rate? So Europe has a trade agreement rate of 10%, sorry, 15% tariffs going in, EU products going into America. The UK has a 10% one. There are lots of exceptions and stuff in those as well. So is that flat surcharge added on to the 10%? We don't know yet. Europe has already come out with very muted responses over the weekend. They've said very little about this, but they have put out a press release, just a generic one, but seemed pretty serious to me reading it. It's only a few lines, basically saying that the legal trade agreement is in place and that's sacrosanct and that cannot be dealt with. If you renege on that, you renege on everything. So, it's interesting to see what way that goes. So how does this section 122, 10% surcharge, how is it going to affect all of the bilateral trade agreements that Trump has done over the last couple of months? And lastly, about 122, what it might do. It may lead a pivot towards the other emergency powers that the US executive have, namely national security stuff. And they still exist. The national security tariffs, if you like, which are section 201 and section 232 and section 301, they're in place based on national security grounds. The worry now is that because we have section 122, which is in our favor as exporters or importers into America, some of the products under section 122 get pushed over into the other emergency powers, which cannot be reversed by litigation because they're on national security grounds. Okay. And just a very important point here, guys, as well to mention, is that in this section 122, and I'll give you at the end the resources where you can do all your lookups to get your product-specific rules, right? The US, there are amazing resources out there where you can, at product level, calculate your landed costs and also see if there's any exemptions. Section 122 did publish a list of exemptions of products at HS code level, okay, that don't fall under it. Now, from what I understand, I haven't had a good look at that list. Most of what's exempted from section 122 was also exempted from IEEPA, but there are some changes. So again, if you're an exporter/importer, and this is high-level stuff here we're talking about, it all comes back down to your HS code. That's what you're going searching for based on that, to see if there are exemptions or if there are, and what your landed cost calculations are going to be. Okay, so in terms of the impact on landed costs and customs declarations, well, the new landscape means that no more IEEPA codes. I think it's all an Irish audience here, but when you hand over your goods, and also, this comes back down to your compliance training and what compliance kind of programs you have in place, but what INCO terms, international commercial terms, were you selling into America under? What were you shipping under? And if that meant that the Irish exporter was responsible for the import clearance in America, just paying for it, organizing it, but not doing it because the local customs broker would do it in America. There's these IEEPA tariffs are gone. Therefore, the codes that a customs broker used to use to file the declaration in America, or the filings as they call them there, to submit the filings, they're gone too. So Chapter 99, they were, so it was burdensome. Every time you had an IEEPA customs clearance to do, you had a HS code under whatever chapter your product was listed under, and then you had a separate line item to put into the custom software to submit it. So huge extra work for the brokers. So that's gone. They're invalid. So the system must, if you were sending over data based on IEEPA tariffs, HS codes, systems have to be updated based on that now. And in section 122 now, they have HTS codes, or their harmonized codes, their tariff code descriptions. They have new modifiers now. So new ways for the customs brokers, to new codes that they have to put in there. Whether we know and whether we we don't know yet if these 10% Section 122 is going to stack above the trade stuff. If that happens, it's major news out there, and that's all political. So that's going to be all over the news. Will the 122s stack upon already legally binding trade agreements? Like, you couldn't imagine they're going to renege on that, but who knows? But the other question is, do they want Section 122 tariffs to 10%? Does it stack over standard most favored nation rates? We don't know that either, okay? Because if that happens, you know, for example, an MFN rate for a forklift truck might be 4.5%, okay, going into America. Will it be 14.5% if the 10% stacks on top of it? And again, we'll share with you some tools where you can do your landed costs calculations into America and all of this. The big issue that I have with all of this, and I'll come to it in a moment when we talk about the tariff refunds, the customs scrutiny, CBP, Customs and Border Protection. A lot of the money collected by the executive has went to building new technology in CBP, updating systems. They've went through a massive IT improvement process, huge hiring of control officers and border protection people. They have the resources now to scrutinize the data like they never have before. They've been doing that anyway. Okay, I've never seen custom scrutinization in the last 8 or 9 months like I've seen in the States with the things they ask for at customs clearance. I've never seen such things being asked for before. But anyway, the refund claims process now could potentially trigger audits on the importer of record and a significant scrutiny of the data you submitted in the first place. That's a risk. So you got to know when doing a refund that what was submitted was absolutely bulletproof. So some actions for importers now, and again, comes back to when I say importers, an Irish exporter won't be able to make a claim for a refund claim. Refunds can, the refund process can only be initiated by the US importer of record, okay? What we call a declarant in Europe. The US importer of record, they're the ones who must make the claim. Okay, now that hasn't been formally announced, but I don't think anybody thinks it'll be any different because that has to be, that's the legal way for the finance to channel back into our accounts. But for now, importers of record are the Irish exporter, say the shipper, who is engaging the importer of record. It might be a local broker. Often the importers of records are licensed brokers on the ground in the US. You want to get them to run the ACE reports. The ACE is the automated something. I should know the name of it. That's like their AIS system in America. That's where all customs filings are submitted. That has been upgraded significantly last year, and they have excellent reporting functionalities. So you should request an ACE report for all of your filings under IEEPA for the refund. That's the first thing, because you see they'll come back in Excel or CSV where you have the MRN number of the customs declaration, where you have all of your data there, and the MRN links back to your invoice, and then you can start compiling the documentation. That's key. If you're looking about the refund process, request ACE reports for all of your filings. You should be really doing that from a compliance and audit point of view, but we'll come back to that. Review your classifications. Ensure your harmonized codes, your tariff codes, are accurate to prevent any errors, and then prepare your documentation. So gather all your commercial invoices, the proof of payment of those invoices, your supplier in the US that have paid you, any entry summaries that have been got, so a copy of your SADs or your import declaration. So you're compiling up, for me, every invoice has a little pack, right? And it's an individual invoice that's going to have a little pack. That's the way to get ready for this, because that's how we get ready for all refunds, okay? So what the ruling doesn't affect, well, here's the key, very important slide. The following trade measures are fully active, okay? So Section 232 tariffs they've been happening for over a year now. They're national security tariffs, which are on steel, aluminium, automotive cars and automotive parts, anything connected to a car. That they're still active. Okay, so they're still in place. And they I mean, I'm not in any way a legal expert. My understanding is Section if it's national security, it can't be overturned by Supreme Court. There are much broader powers from the US executive there. But are they going to? How can they justify moving white goods, washing machines and dishwashers made in Germany? How can they justify moving them into national security tariffs? The talk out there is that's that pivot away from the HS codes in the 122 legislation and push as many of them here as they can justify. Okay, so you have the most favored nation rates. They're unchanged. So your normal MFN rates, whenever you look in your landed cost calculators like the Tariff or the US version of Tariff, when you're doing your landed costs, you always have the most favored nation rates. Whatever they are, they stand. Okay, they're unchanged. Section 301. Okay, these were on goods from China. Okay, related to intellectual property and technology transfer. They're still there. There's lots of stuff in there. And remember, we often ship stuff in Ireland of Chinese origin. They're not good. The Section 301 isn't on goods just shipping from China. It's Chinese origin goods shipping from anywhere in the world. Okay, and there's a significant, there's a significant amount of goods we ship there. And even in the aluminium and steel, it's on the content of it. So we make a product in Ireland like a forklift truck, but if the steel and aluminium came from China, even though it's European Irish origin, that steel and aluminium is charged under Section 232 at a much higher rate. That all still exists. Okay, so the reality here for Irish exporters is not apart from the refunds. It's important to cover this, but apart from the refunds, nothing is really changing on the ground yet. Okay. And then, of course, you always have anti-dumping duties and countervailing measures. We always have those. We have them in Europe. If your product is covered by anti-dumping or countervailing legislation, they still exist. How would you know that? Again, your landed cost calculator you would check. So the rules explicitly authorize the imposition of duties or have distinct statutory foundations that were not challenged. That's why we're not by IEEPA. That's why all of these are exist. So all of these still exist. And one last thing, the current trade agreements still exist. That's why nothing is really changed in terms of landed cost calculation for Irish exporters going to America as of now, but may well change in June. Trade agreements, again, a lot of uncertainty there. Is Trump going to renege on these agreements and stack 10% 122 tariffs on top of the European trade agreement that we already have at 15%? If that happens, Europe fight back politically. They have a lot of power that maybe they need to use. The trade bazooka, they call it, where, so just watch out for where are these 122 tariffs going to be stacked above on top of trade agreement tariffs. If they are, then there are big changes for Irish exporters. Okay, ambiguity still remains on that. Does the 10% stack on top of MFN rates? Potentially, and that's not confirmed also. And what happens when the window expires? Well, without congressional approval, 122 simply lapses and the 10% goes away. Okay, and any product under that regime goes back to that most favored nation rate, which is very low tariffs. Okay, so I guess we have 150 days from 2 days ago, your guess is as good as mine as to whether 122 can be extended by congressional agreement. Okay, that becomes a political issue then. Another point just that take into consideration here then is the de minimis, so-called de minimis shipments, parcel flow, not necessarily the B2C stuff that Amazon sell, but for businesses who might send shipments under €800. So as you all probably know, de minimis thresholds are disappearing all over the world. We're doing another webinar next month in a couple of weeks, specifically on the changes to the EU de minimis starting in July. In Europe is applying the biggest change to parcel imports that it's applied for a long time, starting 1st of July, which is going to significantly affect e-commerce customs clearance and parcel deliveries into the EU. But we'll be doing a full webinar on that for anyone that's interested in signing up in a couple of weeks' time. In America, so that €150 de minimis in the EU is disappearing. But President Trump and his executive got rid of their de minimis last August, on the 29th of August, and that was $800. So we were all, and that affected really huge parcel flows, volumes into America, because it was quite generous, that €800. That went, and we struggled since with postal flows and e-commerce shipments and business parcels going in. So the initial effect was that IEEPA removal, so this de minimis was Section 321 of the Trade Act. We call them 321 tariffs, de minimis. No tariffs on goods under 150, which meant there was no customs declarations. So we think a de minimis has just been a value, but it's more than that. Saves you money at checkout, means you don't pay duties and taxes, but it also means there's no formal customs clearance, which means your goods never get checked and flow through without that admin cost. That disappeared, and Section 321 was very temporarily brought back in just the other day. But there was an immediate reversal of this. So the White House just removed the eligibility again via new executive order. Okay, so this new order is not under IEEPA, making it legally distinct from that. Okay, will there be a legal challenge to that? Again, just the blogs I'm involved in and reading stuff, it's likely to be very, very complex, and it's not likely to happen. Okay, it's not likely to happen. So de minimis is really staying. Okay, for parcel stuff. And interestingly, that was always going to be removed anyway. Now, if I could also say, like, de minimis is with the threat of legal action on de minimis is pivoting the administration in America, in my opinion, to push more and more products at HS code level into, back to that previous slide, into those other mechanisms that are very hard for the courts to touch. Remember, semiconductors investigations, they're still up in the air. Okay, we have to be careful that they don't tariffs don't come on them, because we're affected to a certain extent in Europe on those. Pharma tariffs, where does Ireland stand on them now? Their national security Section 232 investigation is still ongoing. Certain mineral products, derivative tariffs, so tariffs within tariffs, steel content from China within another product, they're still all ongoing under all of those previous methods, and we don't want to see more products pushed in there. Last year, there was certain steel being exported from Ireland was not in 232. A month later, it was in there, and that made things like forklift trucks suddenly now the steel 30% more expensive than it was before, and it meant then that the customs entry was you had to have a HS code for the forklift truck, and then you have to have all the HS codes or bill of materials of the steel products inside. That was a multi-line entry, very complex and very tricky to do. So we risk now more of our products being pushed into those mechanisms with even higher tariffs. So are we eligible for de minimis refunds? A lot of people are saying it's going to be very, very difficult legally to make a refund for a de minimis shipment. Okay, for this parcel flow, it's going to be very, very justifying the refunds here is going to be significantly harder than justifying refunds for like the business to business flow, the bigger flow. In fact, many of these parcels were submitted by the entries were submitted by customs brokers in a roundabout way just to keep going, meaning there's no legal way to refund them because they weren't submitted correctly in the first place. That's not the broker's fault. That just happened because they had no other way to file these low value consignments because the data set was so high. Okay, so operators like FedEx and UPS, they're going to face significant challenges in trying to rectify these past refunds. FedEx have just initiated legal proceedings against the US administration, and I think this is the main reason here to force these refunds that way. So in terms of so watch out for the parcel operators. That's going to be interesting, and even if they get those de minimis refunds, the question is going to be is how do they remit that money back? Like they'll be doing refunds for a declaration worth $100, $400. There must be millions of them, many millions of them. and the administrative work in doing those, to claim back tariffs on something for €400 when the tariffs coming back might be 30. Will they even go down and bother doing it if the refund and practical steps aren't there to do it? Okay. So we're looking at about $175 billion. The reality is there's no, the Supreme Court did not order immediate repayment. Okay, it didn't do that. Okay, it didn't map out in any way how this is going to happen. Okay, you would love to see where that money is, and of course, people are going to be looking at the higher amount first, and maybe they won't look at the smaller amounts, but they'll try and get the bigger chunks back. I've already read online, lots of American legal firms are offering to do all of this process and take it off your hands for 15% of the value of the refund. Just if you are involved in this, guys, as sellers in the US, I wouldn't be reaching out anyway and making agreements with legal firms or consultants at the moment to do your refund process. Wait until we get the practical steps, okay? Because it could be easier than one thinks. It could be burdensome if you're doing many of them, but if you were doing only a few for very high amounts, that's something which I believe is going to be in the realm of the customs broker in conjunction with the seller or the exporter. Okay. So again, it's all remanded now to the Court of International Trade, and they're going to determine on the mechanism for that relief. So that's what we have to watch out for. And the critical deadline here is 13th of June. Okay, so that's the window that's going to close for you to do a certain amount of these refunds. So this is going to happen in real time. So I'll pass on the links to sign up for in a few moments of where this is going to be communicated. They're official US CBP links. It's their messaging system. That's where it's going to be communicated through. And that's if any of you know how Revenue do, the Irish Customs do their e-notifications, for any of you who are signed up to those, cargo messages from CBP in America are the same as those. So it's real operational stuff of how it's going to work. And likely mechanisms might be, it might be court order reliquidation of how they flow back really easily, like almost push notifications of your money back from CBP. You might have to file a formal protest with US CBP that this is the importer of record. And that formal protest is adjudicated on, and the money then is paid back. It's also discussed that which would be the simplest way for me, a post-summary correction, like what we call an amendment to a customs declaration in Ireland. We do these all the time. So this is plug-and-play stuff. It has to be done by the importer of record, and the money has to be paid back to a US bank account. That's my understanding. Now, it might be a case where the money is allowed to be paid back to a foreign bank account. Not sure. That will be in the details to follow. But a post-summary correction is basically the declaration you submitted, you make an amendment to it for the reclaim based on the IEEPA rule. You submit the relevant documentation, probably a commercial invoice. It's likely also you'd need proof of payment that you were paid for that invoice. You'll probably be a proof of, like a screenshot from a bank transfer that your supplier in America actually paid you. This is normal refund stuff. And then you would attach those documents in the USA system and press submit, and your refund is gone. And normally how that works, because I've done these myself, a human being on the other side looks at it and says, yeah, that's all justified, and approves the refund, and then it's paid into a bank account. So we do these all the time. And then duty drawback routes is kind of a duty drawback is where you're making, you're drawing back duty paid, drawing it back. We do these all the time based on goods that were in a bonded warehouse that didn't get released to free circulation, or other duty drawback is when returns are happening. You ship your goods to America, customer refuses them for whatever reason, they were defective, they're returned, and you're entitled to draw back that based that your goods have not been in free circulation in America. Yeah, you have to prove it, but there are duty drawback routes. Customs brokers in America know all of these routes. So if legal firms or consultancy firms are offering assistance here, the legwork on the ground is done by a licensed customs broker in America, and it's just an administrative process. So the cargo message from US CBP, when it comes out, is going to give us the practical process here. But everything has to be initiated before then. So for now, please, if you are affected by if you think you're entitled to refunds, you can immediately request the ACE reports of all the imports affected. Then you have the details there in a file, and you can start compiling, and you can even look at the 80-20 rule. Just go for the 20% of shipments that give you 80% of the value, whatever, and just start compiling a little package of documentation for that import declaration and have it all ready to be submitted for when the broker is going to do it. Run the ACE reports, as I said, prepare your documentation. If it's the route you're going to go down, file your protest before June the 13th with CBP. Your customs agent's your licensed broker is going to do that on your behalf to preserve your refund rights. If there's a lot of talk about and a lot of hot air and a lot of grey areas around how this refund process is going to work or not going to work, you have to preserve your right to be entitled to this refund. And if you've submitted nothing to CBP before the 13th of June, you have no right to that refund. Okay. So key, monitor the Court of International Trade's proceedings. Operationally, be all over that. Okay. Watch what they say. Sign up to the alerts from that actual court, because they might announce something and then CBP might leave it a little bit before they announce it to you. Okay, some things to think about going forward from a strategic planning point of view, guys, is to reduce your costs. As always, look at your HDS codes to ensure they're the right ones you're using. Look at your country of origin analysis to make sure that you're not overpaying duties based on the origin of your goods. Transfer pricing alignment, really important. If you're an Irish company, a UK, European company, and you have a legal entity in America, you're not going to be declaring to customs the higher value, the customer price to pay tariffs on. You're going to declare an intercompany price. That reduces your tariff and your tariff exposure, because you're charged, your landed costs are charged on the intercompany price. That's your customs valuation. So a lot of clients I see have set up legal entities in America so they can charge the production rate rather than the end customer rate. And that's still allowed. That we can still do that. First sale for valuation rule, that type of stuff. There are lots of ways to mitigate your risk to these tariffs, because there's one thing that's certain. Whatever happened, uncertainty is still here. Okay, it's absolutely still here, and we can't, based on the individuals we're dealing with, we can't assume that the volatility is going away anytime soon. And you want to avoid any necessary consulting or legal fees and all of this as well. I always say you can do so much yourself internally. So that's just kind of an overview there of what we cover, the key takeaways. Refunds aren't automatic. You're going to have to do something. Okay, they require an active protest or a correction on that customs declaration. Okay, an amendment to that customs declaration. Both of those, either of those, while it's not certain they're going to require additional paperwork backing up your claim, it's likely they'll ask for it. So why not have that ready? Remember, you gave all that documentation to the customs broker anyway, so you'll have it. For me, it's like a little folder with everything in it. Download your ACE report, have the invoice number on the entry, the MRN number of the entry, a copy of the entry, and a copy of the document submitted with that entry. 9 times out of 10, guys, it's going to be a commercial invoice and a copy of the import declaration, and then the breakdown of the duties and tax paid at HDS code level. It's not that it's difficult to put it all together if there's many thousands of them, but not difficult to put one together. Okay, so in short, this ruling restores constitutional order. The executive in the US illegally applied a law that affected so many people, not just exporters from around the world, but the end consumer in America who ended up paying for these ultimately, and they'll never get a refund. You'll never be able to refund someone who went into Walmart and paid extra for Kerrygold butter, or paid extra for an LG TV that came from China. How are they refunded? They will never be refunded. That, to me, on a human level, is probably the biggest issue of all of this. Okay, but what it introduces is, again, short to medium term volatility again. It's us watching these news, and it's trying to interpret all of these rulings that come our way. So that's just a quick overview, guys. I probably went over a little bit more than I should have. I just want to share with you 2 links, and again, if there's any questions, I don't see anything in the chat there, but I'll just jump in. I think there might be something there. Sorry, yeah, no questions there, but just bear with us, guys, for a second while I share 2 really important links with you. Like the content today, just for example, right? There's a 170-page Supreme Court ruling. I'm not a legal expert. With AI tools nowadays, you can get the operational stuff out of it that you need as a customs broker or whatever, right? So I did use that. And most importantly, what I use for presentations and sending information in the training sessions we do is these it's called a cargo system messaging service, right? And I'm just going to share the link with you. This is really vital, guys, because this is where all the stuff comes from, right? So when you log on to that link I sent you, okay, when they publish regularly cargo messages, they're called, with all of the detail of what the legislative change means to the ops people on the ground. For me, they're the most important messages, right? It's interesting that they're often put up on the website because when you click on that link, you'll see the key ones from the last few days. You'll see the cargo messaging message for the introduction to 122 tariffs. It's only 1 or 2 pages, but it's amazing stuff. It's everything you need to know. But sometimes they don't put them up there, and therefore, but nobody sees them. But if you're on their email distribution list, you get them immediately. I know that sounds a crazy way to run an importing authority in one of the most advanced countries in the world. But there have been announcements by President Trump that affect goods shipping today, and nobody knows how to handle them because the message wasn't put up on the website. It does get distributed to the email list, but it doesn't go up on the website. So I don't want to digress too much on that, but please sign up for those cargo messages, right? And watch out for anything got to do with so when the refund process practically is being told to us, it'll be told to us in a cargo message. Sure, people, trainers and consultants will try and break it down and digest it, repackage it in different ways. But with AI tools nowadays, you can do that yourself too. You know what I mean? You can break it down because you are your own consultant in that sense. So please, so that's where you're going to know. You're going to know immediately by email when the refund process is absolutely goes live. So pay attention to that cargo messaging service. If you're interested in US imports, you have to be signed up for that. And the second link I'm going to send you then is just more of a global, it's very important as well that you're signed up for this. It's where I get a lot of the kind of policy information, and it's that global trade alert website, and they give excellent analysis and break down excellent documents on what's going on all over the world, but specifically on America. So to be signed up for the global trade alert, you'll get the high level policy stuff, a lot of what we cover today. Okay, they won't tell you how to do a refund, but they'll give you all the context. So they've already published excellent stuff on what happened last weekend. Like I got one email of it with all the links to what happens. Just brilliant. You wouldn't have to leave that email to learn everything about the legislative changes. But the cargo messages are the practical stuff. That's going to tell you about stacking tariffs. That's going to tell you about exemptions. So if you're wondering, is your HS code exempted from 122 tariffs? That's in the cargo message. That's in the annex of the cargo message, because that's where you get the HTS code stuff listed. That's the real stuff that we want as kind of ops people on the ground. Okay, that's kind of yeah, that's really it, guys. Well, maybe one last resource. Sorry, just before you leave, I talked about how to calculate your landed costs. Right now, some of you will know this anyway from if you've been training with CILT in the past, because it's one of our resources that we show and learn and teach you how to use during the training courses we do. And just bear with me while I just get you the link, because this one's important, okay? Because this access to markets, just bear with me. Again, guys, please, if you want to just unmute while I show this for the next minute, please unmute and ask any questions if you need to, okay? Cost calculator. Okay. So you're going to use this tool, right? Code. You're going to put in the country that you export from. This is a EU Commission managed database. So this is as accurate as it comes. This isn't a private system. This is available. This is from the EU Commission. So you're going to put your information in there. You're going to select your code, and right now it's telling us. So right now it's not updated with anything. There's nothing has changed. So now, as it stands, this product, whatever I put in this HDS code, it's 10% duty on the value of your goods going in, because that's the trade agreement. If they're stacking and stacking happens, it's going to be in here. You're going to have it as a. See, the most favored nation here is so IEEPA tariffs would be 0 for any country that are affected by them. But we already agreed to 10%, so we don't get this rate. We get a 10% rate. And this would tell you that it's no longer 10%, but it's now 20% based on the 122 rate. This is a landed cost calculator for America. Okay, this is what this essentially is. Because if you click on taxes over here, it will tell you that there's no VAT in America. Sales tax is not collected at point of import. And if I go back to my tariffs, most important here, last thing to mention, I'm sure I'm preaching to the converted, but I do come across some major companies who don't know this, that their landed costs in the US are calculated. So the percentage of whatever tariff you're faced with, okay, is calculated on the FOB value of the goods, meaning the export price from Ireland, not the transport. Some people still declare their transport on their as part of their landed cost calculations in America. America are one of the only countries globally who don't expect you to pay customs duties on your transport costs. That's what happens in Europe and the UK and nearly every other country in the world, but it doesn't happen in America. So make sure you're not paying tariffs on your transport costs into America. Okay. Be sure you're not doing that. So let me share this link with you, and with those 3 links, guys, you yourself should be completely on top of the next steps. Okay, just stay on top of it and pay attention to those press releases and so on. We're going to be doing a master class in customs audits, CILT training in about the next month or 5 weeks. A half-day training course on how to audit your customs processes, mostly auditing customs declarations, but much more advanced than that, auditing landed cost calculators, where all the risk is. So very practical ad, not really for beginners, although if you're in the finance department, you would learn from it, but it's mostly for people who are responsible, maybe at a senior level, for costs and risk for goods crossing borders. So keep an eye out on CILT website for that audit masterclass coming in the next 4 or 5 weeks.